welcome to Smart Stock Watch. Today is March 20th, 2025, and we're diving into KinderCare's fourth quarter 2024 earnings report. KinderCare, a leading provider of early childhood education, has just released their financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. KinderCare's report is quite comprehensive, and there's a lot to unpack, especially with their recent IPO and financial performance in the fourth quarter.
Revenue and profitability overview. Let's start with the top line. KinderCare reported a revenue of $647 million for the fourth quarter of 2024, which is a 4.7% increase compared to the same quarter last year. However, they also reported a net loss of $133.6 million. John, can you elaborate on these figures?
Absolutely. The revenue growth is primarily driven by higher tuition rates and increased enrollment, particularly in their early childhood education centers and before and after school sites. Despite this growth, the net loss is significant, largely due to increased equity-based compensation expenses related to their IPO and lower cost reimbursements from COVID-19 related stimulus.
And what about their adjusted earnings per share?
The adjusted EPS came in at 0.09 cents, which is a positive sign as it exceeded the forecasted EPS of 4 cents. This indicates that KinderCare is managing its core operations effectively despite the challenges.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the future outlook. KinderCare reported an adjusted EBITDA of $66 million for the quarter. How does this position them for the future?
The adjusted EBITDA reflects a 4.9% increase, which is a testament to KinderCare's ability to optimize their operations. They are focusing on expanding their reach with 1,574 early childhood education centers and 1,025 before and after school sites. Looking ahead, they have provided a strong revenue guidance for 2025, expecting between $2.75 billion and $2.85 billion, with an adjusted EPS of 75 to 85.
That's quite an optimistic outlook. What are the key drivers for this growth?
The key drivers include their flexible and broad portfolio of offerings, which cater to the evolving needs of families and employers. Additionally, the inclusion of a 53rd week in their fiscal year 2025 will contribute positively to their revenue and adjusted EBITDA.
CEO's perspective and strategic initiatives. Let's shift our focus to the leadership's perspective. Paul Thompson, KinderCare's CEO, mentioned the successful completion of their IPO and the strategic initiatives for 2025. What insights can you share from his statements?
Paul Thompson highlighted the importance of their IPO, which raised $660.1 million, primarily used to repay debt. He emphasized their commitment to growth through partnerships with employers and schools, and the critical role childcare plays in balancing work-life schedules for families. This strategic focus is expected to drive their expansion and enhance their service offerings.
It seems like KinderCare is positioning itself as a key player in the childcare industry.
Indeed, they are leveraging their scale and reputation to meet the increasing demand for quality childcare solutions, which is a vital component for many working families.
Financial risks and challenges. John, while KinderCare has shown growth, there are financial risks and challenges they face. Can you elaborate on these?
Certainly. The significant increase in equity-based compensation, amounting to $122.9 million, was a major factor in their operational loss. Additionally, the interest expense increased by $12.2 million due to debt repayment activities, including a $24.8 million loss on extinguishment of debt. Despite these challenges, they managed to reduce their debt by $608 million, which is a positive step towards improving their financial health.
And how does this impact their overall financial position?
While they reported a net loss of $92.8 million for the fiscal year 2024, The debt repayment and IPO proceeds have strengthened their balance sheet, providing a more stable foundation for future growth.
Key takeaways. As we wrap up, let's summarize KinderCare's performance and investment prospects. John, what are the key takeaways from this report?
KinderCare has demonstrated solid revenue growth of 4.7% in the fourth quarter, with an adjusted EPS of 0.9 cents, beating the forecast of 4.4. Their 2025 guidance is optimistic, with expected revenue between $2.75 billion and $2.85 billion. The significant debt reduction of $608 million post-IPO is also a positive indicator of their financial strategy.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on KinderCare's performance in the comments below.